Now we're on.
Now we're on?
Now we're on.
All right, everybody, a little bit of technical difficulties. How we doing on this lovely cold Thursday in New York? We're getting Twitter feeds saying we're still offline. We should be online very shortly on btfd.tv/streams. We're going to check in a few just to make sure we are online here. All right.
Live.
So we are live.
What's up?
What's going on, guys? You're here with the Sang Lucci team.
Pop that shut out.
I think I have this.
Trying to get ourselves organized here, guys. Just hold on 1 second.
Yeah.
And then close that window, otherwise we're going to be on the same.
Well, no. I muted it, so I just want to have it up.
He wants to see his own face 3 times.
Yeah, so I had this up. All right, guys. We're live now. Finally, we figured this crap out. So what we're going to do, again, take all the questions that we've gotten from the emails, mailbag at Sang Lucci. We've got a lot of questions today, so we're actually going to get right into this. Let me just preface all this by giving you guys an update on, my long financials crazy trade, which everybody is waiting to hear an update on. You guys are going to get a nice sneak peek, though. I'm just going to screenshot all the positions that I have right now, and hopefully you guys can see this. You should be able to see this fine. And basically what you're looking at is some Apple leftover calls. This was just kind of a throwaway position I traded today. Apple shot up a good, what was she up? A couple points, 7 points? And then you can see the meaty positions here. So I have massive contract size in Goldman Sachs, Morgan Stanley, Wells Fargo, JP Morgan, Citigroup, and Bank of America. Most size being in Bank of America. I'm not getting much love on Goldman Sachs right now. And again, I don't think the big bank rally has happened yet. I mean, most of the stocks that really, got pumped up today were Priceline and, the Googles and the Amazon, by the way, hit new 52-week highs. Amazon was great. You could have made a killing in Amazon options. Unfortunately, I didn't play that. I ended up playing Apple, all that kind of nonsense. But a lot of my chat room guys got that, though. All right, so there you go. There's a position, and let's go ahead and get into some of these questions here. All right, so we have a ton of questions to take here. Did you update this, by the way, Charlie?
Yeah, Eric's on it.
All right, so you guys are live with all of us. We got Charlie here. You got Peter in the back. By the way, Peter's watching anime. This is what he does all day. He doesn't do anything, but he watches anime.
That's what managing risk on Sang Lucci is like.
Yeah.
Very stereotypical Asian. Okay.
Yeah, I only watch the best.
Right.
So.
Right, and he knows about all the new ones before they even come out. Okay, so anybody who wants to know anything,
that's not just anime.
That's true. That is true.
Which I get very upset about, but that's a different rant. All right. Different time.
All right, so let's go ahead and take some questions here. Let's go with starting it off. Eric, what do we get? Eric Mikis, I believe that's how you say it.
Yep.
I started following you a couple of years ago when you had the free chat room. Woo! Wow, this guy is an old school, man. I think you were doing a great job sharing your knowledge with us. What do you think about these credit cards? What do you think about these credit cards? So he's asking about Visa and MasterCard and AXP. And what is the other one? DIFUS? Yeah, the other one is DIFUS. So guys, with money supposedly moving into I'm saying supposedly because I'm hoping that money moves into financials. The credit cards were obviously pumped up long before the rest of the financials. However, I think if you really do see that flow into financials towards the end of the year, you might see that as well in MasterCard and Visa. However, for anybody who's trying to go long MasterCard and Visa right now, I would choose Visa #1. And then be ready for pullbacks. You have to be ready for big pullbacks in all of those names, okay? Because this MasterCard is up, she's on a 100-point run. Don't get cocky and think you can just buy this now and she's going to go to freaking $800 with you in it, And definitely take it easy and try to get the dips. I would go with the Visa more so than I would the MasterCard, but I think these things are all going higher. I think these things are all, as long as the market has a bit in it, these things are going higher. So So that's my answer to that question. Now we have a, let's see, let's skip over to Travis. So we got Travis. He's got a bunch of different questions here. I noticed on my trade ladder, okay, I don't know what platform this is. What is trade ladder? Pete, do you know what trade ladder is?
Nope.
It might be Thinkorswim. It might be
it marked in my Thinkorswim platform.
Thinkorswim, yeah, okay. So I noticed on my trade ladder that if I roll over just below the spread, if greater than 2 cents, there's a spread greater than 2 cents.
Oh, it's a good question.
I can cause the ask size or bid to jump in sync. This guy is starting to get it. When I have my auto send check marked in my TOS platform, this is for real. I swear my platform is being monitored, hence my 2-second delay on my system clock. I can cause it to happen at specific times during the trading day and many different tickers, even options, price line today, 1035 puts. And he's going into dissertation with this particular example.
That happens a lot.
Yeah, so I'm gonna let Pete go on.
In general, yeah, Thinkorswim is going to lag you when you put it in order, but what you have there is called they're called barnacles or joiners. So they're barnacle market makers or joiners. So say, for instance, you have a 10-cent spread at most times, and then at lunch, all of a sudden, it gets to a 20-cent spread. What ends up happening is that it's a 20-cent spread because nobody's playing in it. Market makers don't want to play because nobody else is playing. If you decide to start buying at a certain time when the spread is wide and you kind of get a little closer for the bid, it's a barnacle that will attach right next to your bid. You're slower. They actually are in front of you, and they know that you're there, so therefore they're going to join you. That's why they're called the joiner market makers and the barnacle market makers, to increase the spread and put it back together. It's dangerous. It also shows you that market makers are willing to play with you at a certain time. That could also be a sign that you should not be buying at that time because they're going to screw you on the spread.
Right. By the way, guys, we found him on a park bench in D.C.
Oh yeah. In LA.
We found him in a park bench. You know, he was homeless. He needed somebody to do something with him.
He doesn't care about home. He just cares about learning more shit. That's all he cares about.
All right, so we have a Sang Lucci subscriber here. We got Tom Brothers. He's been he's been sending us questions for it since we started this.
Yeah.
Shout out to Tom. So I know you are a proponent of tape reading, but for swing trades like you're doing in the banks recently, that would be a swing trade. Are you basing the reason to be in the trade on the tape, or are you basing it on other stuff too, like money shifting into the financials and all that kind of stuff? Everything is still based broadly on the tape. Everything is always based on the tape. And you know, gauging where the money flow is going. I mean, that's a very tape. That's tape analytics, so to speak. I'm also timing it. It's also market timing, which I consider tape as well. You know, I consider all that tape. So if you're doing market analysis and saying, okay, SPY's going to break out into a new trend, like we are right now, and we are pushing all-time highs right now, where is the money going to flow to? You know, where's the money going to flow to, and what's the action on some of those names? If any of you guys have taken a look at Bank of America for the past 4 days, there has been ridiculous buying in that thing, okay, which we haven't seen for months now, since July. She started consolidating out in July. So now's as good a time as any. So to answer your question, Tom, this to me is all tape. I'm basing all entries and exits on tape. You know, but the swing trades might be a little bit different because you have to take into account, you know, market behavior, you know, what are your other names doing and all that kind of stuff. So it's not just a quick day trade like you would in LinkedIn long today or Google long or Amazon long. You know, this is just a quick, you know, that is just a quick, you know, jump in, get the hell out. If it hits all-time highs kind of trade. This one is more, okay, you know, overall money flow and where we're going to end up. La-di-da-di. All right, so we are now we are now back. Nice. All right, so let's go back. We should be coming up soon.
No, there again. No, it'll be like about a minute.
Yeah, it'll be a minute.
Lag.
All right, so let's just get into it.
I got it.
Should we wait or should we just go? Oh boy. Now I'm paused out.
Okay, he just said, just back.
All right.
Maybe.
All right, everybody. Sorry about
that,
that. Sorry about that, guys. We clearly are not masters of our domain. However, this is good. This is good because it gets all the kinks out. You know, it gets all the kinks out. We just went from 180 down down to nobody. All right, so we're going to take this next question from D. Jack, who is also another Sang Lucci subscriber, okay? And he's saying, since I've joined the chat room, it's been a great privilege to learn from live traders giving live tips instead of moving average crossovers. Guys, we don't do that here. I haven't used a moving average in my life. In my life, I haven't used a moving average in my life ever. I remember I had it on the screen once. You know, it's like, what are these squiggly lines again? What's going on here? So he's saying, so kudos to your team for this opportunity. I'm asking about the Sang Lucci scholarship. I've joined the On the Move course, and it touched only the surface of what you guys are trading full time, but I can see some hope for me to trade using these methods. So I'm very much interested in getting the scholarship. So for the scholarship, the professor here, a.k.a. Charles in charge, is going to tell you some shit about
the scholarship. All right. The question is, so I'm very much interested in getting that scholarship. What do you require the hopeful participants to write in an essay? You know, you guys, you can check that out on sanglucci.com. There's a post up there with all the rules that talks about the scholarship. Just Google Sang Lucci scholarship. It'll come up. I mean, basically what we're looking for is, like, you know, right now I think we have over 50 applications. Like, it is important for us you got to differentiate yourself, you know, and I'm not trying to be a dick right now, but, like, don't sell a sob story. That is not something that works. It's
why you got to be a dick, man?
I mean, I've lived with you for 2 years. You taught me how to be a dick. You know, you've convinced us what it is that makes you different, like why it is that you believe so much in trading, why you believe in yourself. You know, I don't know really what else I could say beyond just the directions that are in the post. You know, you got to find a way to differentiate yourself, guys.
Yeah, have some fun with it. And I'll tell you, for me, what I'm looking for is the meme. Okay, is the meme. So when you look at what we want for the scholarship, where can I get the details for that, by the way?
Just literally Google Sang Lucci scholarship.
Google Sang Lucci scholarship, guys. So that's all you got to do. And when you read what we're looking for, I want the meme. I want something creative. I love memes. I love stupid memes that talk nonsense. So, you know, go through my Twitter feed, you know, look at all the nonsense that I sit there and I say, and make a meme. Do something. Give me something.
And another thing, we do actually read. We sit down and we read every single one of these things. We go through every one, and there's a big thing.
Charlie reads, actually.
I read them all. He doesn't read any.
I know.
He doesn't even like you guys. I'm just kidding. 500 words or less. Seriously, like, sometimes we get people, especially people from, like, you know, Eastern Europe. You know, we get great applications from Eastern Europe. We do get some from just random countries, and they'll say, "Here's my application. It's 2,000 words," and I'm like, right there. I mean, you're out of the running, man. You got to be able to follow basic directions. Otherwise, how you can be able to listen to us and how we teach you how to trade?
You know, give them a lecture now. Now they get a fucking lecture.
I mean, come on. I got my soapbox. So I might as well make use of it.
All right, so next question comes from Gerald? No, Gearoid. He's from what's the video game? Metal Gear?
Metal Gear Solid.
Gearoid is a Twitter handle.
Okay. Okay. I think he's one of our subs too. I'm not sure.
Faulkner's a tight last name.
Faulkner. So when you are trading, do you look at options charts or do you just look at the level 2 and time it sales? And I love when you want to get into a position, you just smack the offer for hundreds of contracts. Again, guys, I mean, he's saying he loves it, but you gotta imagine it this way. If there's a big alpha move that is coming into a particular stock, like you take your Amazon today, okay? Amazon hit all-time highs, stock was up maybe 12 points, right? There's a big alpha move out there, and you're a market maker, right? And you have to provide liquidity, right? That's what your job is. You got to provide liquidity. But you know there's so much demand coming up on that option. Would you want to sell it to guys like me? Would you want to sell options like that to guys like me? So you have to put the edge back in your favor. So what do? You widen up that spread. You make somebody who wants to get in there, you make them pay up for it, And what happens is you essentially step out of the way from guys like myself who can time these moves correctly and who can be on the cusp of a big 12, 13 point move in Amazon. I wouldn't want to sell me those contracts. Shit, I'd be taking all kinds of losers, If I'm over here making 300 grand, imagine how much the market maker is losing on guys like myself. We saw that in Apple today on the option that I was in on this 525 call. There was a huge bid that came in on I forget what exchange it was, and slowly stepped this thing up. And I'm just assaulting offers right in front of this guy. So again. It's kind of what you have to do if you're reading tape and you're trying to go for that momentum and trying to go for the right timing. So he's saying when you're trading, do you look at the options chart or do you just look at the level 2? I just look at the level 2. So I just look at a sample level 2 of a particular option. That's it. So guys, you can check it out here. I'm actually going to show it to you right here. So take a look at this right here. So this is your sample level 2 of this Apple option that I was trading today. It started from like $1.50 and change. It went all the way up to about $4.50. So all I'm doing is watching bid and offer for these, for whatever option that I'm in. That's it. So I'm trying to assess, who's really buying on the offer. Are they aggressively buying on the offer? What's the market maker spread? Are they pulling it back? What are they, what are the games that are being played on the level 2? Remember, this is completely different from tape reading the equity. Okay. You're tape reading the equity to figure out what the equity's doing, but then when you come to the options, you got to figure out, okay, where can I get it filled? How do I have to just go through the spread if I want to buy this thing? What kind of exchange do I want to use and all that kind of stuff. So there's a lot more going on, on the options level 2 as well. Okay. So great question, Geroid. Thank you very much.
There's a comment up there from Speculation that was great. He goes, "I would pay for your order flow."
Exactly.
That is the name of the game.
Whoa. Where are you from?
And Pete wants to come up on
he
that.
says JK. I mean,
Oh.
don't get Pete all excited like that, man.
Yeah,
You want to go on some payment for?
The only thing he gets excited
What
about
about
is
payment for order
anime and order flow.
Yeah.
That's
Want to go in
P-pop.
order flow? Let's go to get some order flow.
He loves it.
Speculation is also asking here, how do you know what's real or fake on the level 2? Well, you have to watch those bids and offers either being pulled or are they getting filled. That's the easiest way you know if it's something real or not. If somebody plops out a 20,000 share bid or a 20,000 share offer on a stock like Apple, watch if that order gets filled or watch if it gets yanked. If it gets yanked, then what is the reason? What is the reason? Are they trying to hold the stock down? Are they trying to hold the stock up while they collect, while they sell out of a position? What are they doing? What is the real deal? Bag holder saying Casey Affleck is sitting next to Lucci. They think you look like Casey Affleck. That's terrible. You don't look like Casey Affleck.
It's because of the sweater, dude. It's because of the sweater.
Plus, he doesn't have a Boston accent, man. Anyways, all right, so now we got another question from Randy. Could you explain how a surge in volume, like we saw yesterday in Bank of America, of 4.3 million shares, did not send the stock noticeably higher? 4.3 million shares for Bank of America is her just clearing out 1 cent or maybe 2 cents. So it's not really that much volume. Pete, you want to say something here?
I was just saying that's like 5 minutes worth of data. Is like
Exactly. So what Bank of America will do is, let's say at a significant level, let's say the half or I don't know, 75 cents or something like that, or in this case, there was big size at 14.60. And what you saw was about 1 million shares or 2 million shares on the offer, and then all of a sudden, at one point, everybody just compounds on each other and takes out that offer. So it could just be, a couple of cents. So for Bank of America to do the 4.3 million shares, that's not a big deal. When you're talking, 40 million and upwards of that, then that's a different story.
Yeah, for like a couple cent move, that might be enough, but you got to just think about the liquidity. Like in supply and demand, you have to remove enough supply in order to jack up the price, right? And within dark pools and lit pools, 30 million shares is nothing.
Lucci's mom's calling everybody. You want to answer live?
I mean, shit, I can answer live.
Is she watching right now?
She would be so confused. What is going on, son? All right, we have another question from Hemi. Hemi. I like Hemi. I really enjoy your transparency on the stream. I have been trading future spreads in some capacity for 12 years. I'm considering coming to the dark side of options. There seems to be momentum and opportunity in the equity options. Correct me if I'm wrong. Chicago prop market has evolved into a very tough place to make a living. That is a very good point. As I'm sure many Chicago prop traders can attest to this as well. Most good traders just need some movement, momentum, and opportunity to get back to making a living. Thanks for the transparent view into your strategy and market. So this seems just more of a comment versus a question.
Well, I think he says, I'm considering coming to the dark side of options.
Yeah.
There seems to be momentum and opportunity. Like, do you think there is momentum, opportunity, and options right now?
Absolutely. If not, I wouldn't be here. And the tricky part is, though, it's the timing. It is all about the timing. Everything in this game is about the timing.
In the options game.
In the options game. So most often, guys, for active options traders like myself, it's better to sit out. There's months at a time, weeks at a time. Where you shouldn't even be doing anything, or you should be writing. Okay. So I feel like a good options trader can bounce back between the two strategies. I still haven't gotten there quite yet.
And also transition over from futures. Actually, I talked to Stritty. I want to shout out to Stritty. He pretty much gave a really good example of how he thinks that the financial markets are kind of broken compared to the futures markets out there. And so if you think that there's momentum that's similar to futures, test the waters first. Don't just jump right into it. They trade very, very differently. And as Stritty said, that the auction process is kind of messed up in the financials, in the equity options market. So be careful. You have to know what you're doing. Most of the time, you should be selling options.
Yes.
If you want to catch real Momo,
yes,
you got to be a fisherman. You got to wait forever.
All right. So our next question is from Muspet. Of course, we love Muspet here, even though he's a big herb. He was one of my original students, guys, and he kicks ass in the market right now. He's asking, how are you going to reward yourself when? And he of course he bolded when. Goddamn. How are you going to reward yourself when you make the seven-figure profit?
He didn't say if.
Yeah, that's the point.
Okay, all right. So he's got a vote of confidence.
I know what he
said.
All right. So how are we going to reward ourselves? I mean, I'm going to go get wasted.
You do that if you make $1,000. I don't know what the differentiation is.
So as soon as it happens, I'm going to call my peoples up, and we're going to go get wasted.
We did talk about skydiving. We talked about skydiving. We've talked about cage diving. I want to do a bunch of weird, crazy shit.
Cage diving?
Shark cage diving.
Dude, that's white people stuff. Okay?
Well, you work and live with a white person.
Oh, man.
Just get on board.
Oh, man. Skydiving, yeah, I mean, we can, I don't know. So what are we going to do? Honestly, I'm going to go back to Boston, and I'm going to spend time with my family. That is exactly.
That is the right answer.
I mean, I'm going to get wasted, okay, and then I'm going to go do that.
Get wasted with fan.
Okay, wasted with fan.
Chocolate wasted.
Yeah.
All right, so let's go to the next question. Tom Miller. Tom Miller, hi guys. Do you have a favorite technical indicator? Oh, I love this. We're going to take this question.
Okay.
Hi guys. Do you have a favorite technical indicator, RSI, MACD, or just old school and only use price and volume? At least he ended with that question.
Just
so
nice.
Tom, I'm going to be
nice.
nice. I'm going to be nice. I'm going to be a nice guy. Tom, I don't know you. So shout out to Tom Miller. He's asking us what technical indicators we use. We don't use any technical indicator. We don't use any of it. I don't use it. I never look at it or anything. I mean, the most technical I might use is looking at a chart and vaguely looking at support and resistance on some kind of a consolidation level. That's really it. So yeah, old school price and volume. That's it. Old school price and volume. And I am a firm advocate of the fact that that is all you need. That is all you need. In fact, people need to go back to it, okay? Because a lot of the technicals that you use these days, they're not working like they did before. All right. So now we got a question from John. Actually, we'll do Anthony here. What is the single most important thing you look for when determining which stocks you'll trade? I didn't even know how to answer the question.
What was the question?
What is the single most important thing you look for when determining what stocks you'll trade?
Momentum.
Volume, momentum.
Yeah, I mean, and again, guys, I only have a small basket here. Guys, you want to see my basket? Let's show you the basket. So here we go. We're going to show you the basket of the stocks that we trade. Okay, this is the basket right here. This is it. This is it, literally.
And a lot of those.
And a lot of these I don't even look at.
Like when's the last time you traded X?
Never.
We haven't traded
Never.
X yet.
But you know what I have? You know why I have her on there is so that I know if money is going to the material sector.
Right.
You know, or if it's going to potash or the agriculture.
Right. So a lot of this is like they're like sector rotation indicators, right?
Yeah.
But
So
the stuff you actually trade
is predominantly LinkedIn, Google, JPM, Goldman Sachs, MasterCard,
Apple,
Gold,
obviously.
Apple, obviously, Amazon, all the names that
Amazon.
Amazon. Man, she has taken so much money from me.
MasterCard too.
And Twitter is going to be soon. I put Twitter on there because options are going to come out tomorrow. So that's going to get interesting. Those weeklies are going to come out soon. LVS is always a great trade. She's a mover. You can get heavy in the options. And then you got your SPY, of course. You need to have your SPY. So as you can see, I mean, this is a pretty good broad of all the large cap names. And I'll change this every once in a while. I might throw an F5 in here. I might throw I think I recently put Tesla in here. So I'll change.
You've been doing well in Tesla. Right?
Yeah. Tesla's actually not that bad.
Yeah.
So yeah, I mean, guys, again, no technicals, just straight price. What else we got? So Sanjay right here has asked several questions. He's got a 5-part question. Unfortunately, Sanjay, we are not going to answer all 5 of those. Let's see. In your experience, what's the best strike price to pick for swing trading? At the money or deep in the money? So, Sanjay, I know you're asking these questions from a person who has, done probably some research on, options trading in general. Maybe you picked up a book here and there. Maybe you traded a little bit, or maybe, whatever the case is.
That sounds like options for dummies.
Yeah. So again, like for me, I don't. The only time I trade at the money is on a Friday if I'm trading a weekly that's about to expire that day. I never trade deep in the money. You know what I have thought about doing is writing those deep in the money options on a big picture move in the other direction, because you can get premiums of, let's say, $20 or $30, and you can write those options assuming they're going to go to zero once that stock completely reverses direction. So to answer your question, we don't do it. We go out of the money. Okay, we go out of the money because, again, we're tape readers. We're going for that momentum. We're going for big picture moves on the index. So the reason why I made these financial trades was because the SPY was breaking out, and so I'm way out of the money on monthly options in December. Okay, I got like 600 G's out on all this stuff, but I'm in all out of the monies. I am not in the monies, and the reason why is because the percentage gains is on the out of the money, provided you can time it right. Obviously, it's a little bit riskier. But damn it, if I'm going to put down 600 grand, I want to make $1 million. I'm not happy with 100,000 on a $600,000 trade. All right, I'm not happy with that. Okay, let's see. And then he's also asking, what platform do you use? How does it compare with Thinkorswim and IB? Okay, so I have an institutional platform. Okay, it's called ROX. All right, and this is proprietary to Lex Securities, the broker-dealer out here in New York. And how does it compare with TOS and IB? Well, number one, it's going to have faster data. And then number two, it's going to be stripped down. It's going to be stripped down. And remember, the retail platforms are built for the retail guy. And what does the retail guy want? The retail guy wants bells and whistles. You guys seen that? You remember that commercial now on CNBC where they're mocking the guy, the Scottrade guy with the helicopter? And the guy just walks out of the helicopter. He's like, yo, I got all these tools, man. I got this, I got that. and it's supposed to be like Monster Trader. It's like a parody commercial or something like that.
Right.
And that's retail. Retail wants all this garbage that they don't need, but they don't know they don't need that. You know, and it's kind of like a marketing thing. It's a big marketing push for all these retail platforms. Thinkorswim, guys, I think it can even scratch your balls. I've heard that it can scratch your balls. I mean, you know, if anybody here has Thinkorswim,
You gotta have PMA to get that done. With Thinkorswim, the ball scratch.
Exactly.
Over 250 grand in your account.
Right. So again, with Thinkorswim and IB, number one, like I get better commissions. I get much better options commissions. You know, as far as executions, just because of the delay that you're getting on Thinkorswim and IB, you know, you're not getting the best executions. So that means when you're looking at your level 2, you know what happens on Thinkorswim and all this kind of stuff? So like if you take a look at, let's go back to this. Where is it? Yeah. So if we take a look back at this, what you're actually seeing on a level 2 on Thinkorswim might not actually be there, you know? So, and especially this is Apple, so this thing is moving like crazy. So you're going to go ahead and send an order for 410, but in fractions of a second, it's gone. It's gone. Your order doesn't get filled. She moves without you. Or you send a market order and think that you're going to get filled at 410 because you see the size there. You don't get filled, and they give you a fill for 430, you know, because the market maker pulled back all that liquidity. And the only offer for you to get off a market order is 430. Now remember what happens too when you send your market orders. You're basically telling your broker to do whatever he wants to do with that order, to do absolutely whatever he wants to do. Okay, so you're playing that game as well. So how does my platform measure up to you know, the Thinkorswims out there and the IBs? Again, it's very stripped down. It doesn't have all the bells and whistles that you know. There's no options probability calculator, which is going to tell you the value. Which is going to tell you the value of where you're going to sell your option, right? You get in an option trade in Thinkorswim, and then you can press a button. You can press a button, and it's going to tell you, hey man, you can sell here. That's what it's going to tell you. Bullshit.
Yeah, did you see this?
What else we got? What else we got?
Said Moody's cut some of your bank positions just now.
Uh-oh.
They cut GS, MS, JPM, and DNY Mellon.
Uh-oh. That's a big deal. That is a big deal. Let's see what happens. It looks like that happened at the close of the day. That's probably why Goldman Sachs just dumped out like that. So who knows? We'll see what happens tomorrow. That's a big downgrade. We'll see what happens. Thank you for that heads up. So let's take one more question here, and then we'll kind of wrap it up. Let's see. TC is saying, I watched your tape reading video on YouTube the other day. How can I access the tape history to extract and study the transactions to find patterns? Well, here's the deal. Most platforms will not support giving you that data simply because they got to pay money to store all that data for you. So now most platforms, they don't even offer it. Like you're not even going to be able to get weekly options charts, updated options charts. You're not even going to be able to get tape. And even if you do get tape, they might only give it to you for like 30 days past, and then anything beyond that, they're just not going to give it to you. You know, so as far as where you can get it, the ones that I know have it are Thinkorswim. Fidelity definitely has it. I don't know about any others.
I mean, Musso records his own tape.
Does he really?
Yeah, he records and reviews it every day. He puts up video lessons for, you know, OTM guys. But I mean, that is an option if you're really that obsessed with it. You can record your own tape. You know, do the screen share, screen capture.
Right.
And that's what Musso does. And then he sits there, and it's like watching film. You know, it's like watching like an athlete watching film. He watches tape,
right,
and he reviews his own trades.
Indeed.
He is psychotically devoted. If he's in here right now, shout out to Musso. But yeah, that's an option.
Yeah. Okay. So let's go ahead and maybe take another couple. We have a lot of chat. There's a lot of chat going on here. Everybody's talking about the bank downgrades. I'm gonna have to take a look at this because this is obviously starting to scare me a little bit. What do you think about Amazon and Netflix targets for tomorrow? How would you catch a trade like Amazon 360's yesterday, which was 15 cents and now ends at 8 with one more day left for expiration? Bro, that's all timing. You know, that's all timing. That's all you, because how many times are you going to see an option on, let's say, Amazon or Apple or Netflix that's worth the same price, and every time you buy that, it goes to zero? You know, how many times is that going to happen? 9 times out of 10, that's what's going to happen. That last time, though, that's where you're going to make your money. You know, and again, you have to work on the timing. You have to work on the tape. All right.
Dude, I love this. Bag holder said 20 minutes ago, can you smile? I can hardly see.
Bag holder.
That's awesome.
He's saying, can you smile? I can hardly see. I got to wear a white shirt now. I got to wear something.
Or we can just turn on the lights.
Or we could do that.
We can do that.
Can you see Peter and Charlie? Are you
Pete's the white ghost, man.
Oh, wow. Look at that. Look at that. Look at that. He got the flashlight. All right, everybody. So thank you, everybody, for coming. Do we have anything else we want to say for them?
No, guys. I mean, dude, get applications in for that scholarship. That's like one of the most fun things that we do. It's really cool for us. We really appreciate all the work you guys put in that. So, dude, get those things in there.
Cool, cool. All right. So we look forward to reading those, and we'll see you next week. Hopefully, we will not have any of these tech issues again. We do apologize for that.
It's not our fault, but our audience is so big. Google can't handle us.
All right. So we'll see you next week, Thursday, on the Mailbag.
Thanks, guys.
Later.